First, I want to welcome everyone. Thank you very much for making time to join us. And I hope you'll find this to be informative and useful. And I also want to thank my team, especially Akash and Matt, who are online with us right now for doing a lot of the preparatory work to make this webinar possible and to make it work as smoothly as it can. So thanks guys. It's great to have you doing this stuff. Akash and Matt. Okay, so I'll get into the legal disclaimer bit in a moment. Before I do that, I will explain I'll give you a brief bio on myself and on what I'm up to, historically speaking. So I started my career as an engineer. I moved to the US at the age of 23, got involved in my first tech startup at the age of 25, which is a company we took public to the NASDAQ, Ashton Tate, with a product called D-Base that some of you might remember. I was their 12th employee, the first vice president there, and ran international and marketing and US sales at different times, and some of them at the same time. That was a great experience. So I've had the good fortune to build 6 prior startup successful companies to liquid outcomes. One other IPO was Symantec, the Norton antivirus company, where I was executive VP from before we had products. I was there almost 10 years. And when we started buying companies, I ran the largest mergers, the implementation of the combinations of those companies. In the first internet bubble, my friend Safish Qureshi and I launched a venture capital fund called Irvine Ventures in Irvine. What a surprise. And an incubator we built. That was fun and interesting experience. And I launched Start.ac as a prior crowdfunding company, but Manhattan Street Capital I started it 5 years and a couple of months ago. We went live 5 years and 1 month ago in May of 2016 as the first specialized Reg A plus funding platform at that point in time. Manhattan Street Capital is, for those of you who don't already know it, I'll try and be brief. We specialize primarily in Reg A plus offerings, in helping companies succeed in making capital raises via debt and equity offerings using Regulation A plus primarily, and occasionally Reg D offerings as well. So we are a platform and a project management and advisory firm where we assist companies to succeed. We're selective. We've got a lot of differences about what we do. And my intention is that we will be the clear leader in this space over time. That's the entire goal of Manhattan Street Capital. I am wearing, notably, 2 hats in this webinar. One hat is what I just did, which is Manhattan Street Capital, as in the graphic behind me. The other hat is the founder and general partner of the Manhattan Street Fund, which is something I've been planning for a long time, and now I'm very pleased to be moving forward with. So that's the background on me, I guess. Legal disclaimers. I'm not an attorney, I'm not a valuation professional, I'm not an underwriter or broker, and those things. And you'll see if you look at the comments on your Zoom, you'll see long legal disclaimer text, which I'd like you to look at. One covering the Reg A plus test the waters for Manhattan Street Fund, and the other one covering the Reg D for early investors in the Manhattan Street Fund. So please do take a look at that, because it matters intensely, and covering the legal basis is an important piece of this regulated space that we're in. The agenda is, at the top level, the agenda is very simple. I will talk about Manhattan Street Capital, as described in the booking documents that you saw, and I will then cover the current Manhattan Street Capital offerings, which are relevant to the fund as well, because they're examples of the sort of investments that the fund might make in the future. Then we'll handle questions and answers, and you're welcome to prepare and type and put in your questions early so that we've got a nice stack at the end. I will answer the most informative questions where I can be the most useful first. I don't want to ask, you know, for obvious reasons. Okay, so how to ask questions? You go to the chat icon. You should see a chat icon in the footer of your Zoom window. Click on there and type in your question. The best view, I think, for the offering is to use speaker view. Top right corner, you've got a little thing that says speaker view or some other view. I forget what the other one's called. Yeah, okay, good. Well, I'm done with that page. I'll move my notes here so I'm not looking away from the camera so much. So the Manhattan Street Fund is dedicated primarily to investing and lending money to companies that are preparing a Reg A Plus offering. A very large percentage of companies that choose to do Reg A Plus, really strong companies, you know, many really strong companies need more money than they have on hand and don't want to take an awful long time to go about raising that money. So there's a significant need for this capital, and that's been an obvious thing to me for a long time. Many people have thought that we had a fund already at Manhattan Street Capital. This is a separate entity, as it needs to be from a regulatory standpoint, but there's obviously a lot of synergy here. Reg A Plus, so Manhattan Street Fund is that. I'll get into more detail. It's like a venture fund because it'll be doing equity investing as well as lending money to these companies with a view to making decent returns or better than decent returns for our investors. For those of you who don't know what Reg A Plus is, I'll briefly explain it. Reg A Plus is a system that has been in place since the summer of it's been for 5 years now. It's been available to companies to raise up to $50 million a year currently. That might get increased to 75 million. It's a public offering in every case. It can be used to list on the NASDAQ or on the OTC markets or not. But as far as the SEC is concerned, these are liquid offerings where the investors are allowed by the SEC to sell their shares, their bonds, their securities when they get them. Then the question is where, which I'll get into later as appropriate here. So Reg A Plus, it turns out, because it's a very big, one of the biggest advantages of it is that anyone can invest worldwide, you know, with notable exceptions like North Korea. But, you know, most countries in the world, people of any wealth level can invest, not just anywhere, but any wealth level. If somebody has Manhattan Street Fund's minimum will probably be $400. I think it says 500 currently. But if anyone has $400, they'd like to engage and maybe check it out and perhaps put more in later or whatever. That's a tiny amount of money. For a lot of people, you can obviously put in a lot more money. But the point is that broad availability, conveniently invested, you know, 4 to 6 minutes investment process via your smartphone if you choose to use it for that, makes Reg A Plus really work well when an offering can be explained clearly and easily and when investors like it, when they care. Okay, so Reg A Plus as an instrument, in the year 2019, over $1 billion of capital was raised through Reg A Plus offerings at an average of $20 million per company. Obviously, there's a spectrum there going up to 50 million and down to smaller raises. It is, in my view, a very attractive fundraising system for companies to raise debt or to raise debt capital or to raise equity capital. That can be a thing of beauty when it works. For companies that have a fan base or a large customer base of happy customers, the marketing costs can be remarkably low because the fans will invest. one example of that is a company called VidAngel that raised $10 million in 12 days live in their Reggae Plus with virtually no marketing expense at all. They emailed their most active 30,000 customers who loved them, and it was a well-presented offering. That's the unusual case these days, but as more and more companies engage with Reggae Plus, we'll see more well-established companies using it that way, because it's a sweet arrangement when you do it, when you have a following. The kinds of fund companies that Manhattan Street Fund will focus on are the ones that work the best in Reggae Plus: real estate, biotech, obviously COVID-19 related companies, alternative energy, things that resonate with the consumer. That's why biotech's so strong, and frankly, companies that are working to reverse global warming in a big way. I think there's a humongous need for that, and if we see companies that are taking that approach, they'll get a warm reception here. The fund is primarily lending. 60% of assets will be deployed through lending to companies, and 40% through equity instruments, and that is a regulatory requirement for the method that we're using to build this company. The profit stream will be in the form of interest payments on loans, upside on stock sales, and upside on warrant exercising and sale of stock warrants in companies. And one of the nice things about Reggae Plus is that, I'm not saying this will happen often, but it will happen, and it probably will happen often. That's my intention. Is that the fund, that when we put money into a company, can get liquid by being a selling shareholder in their Reggae Plus. That's an entirely legitimate thing that can be done, where the step up in value for equity investments can be significant, because, you know, frankly, the risk being taken by the investors in a company that wants to do a Reggae Plus but hasn't done it, versus the risk to the new investors when it's done or is doing a Reggae Plus, is significantly different. So significantly lower for the later investors, significantly higher for the early ones. So for us to get a better valuation on our investments as early stage investors in the cycle for when we're dealing with these situations is relevant. And in that situation I'm describing, we get a rapid recycle of capital. Capital goes in, and either all of it or some of it can come back rapidly and be used again, right? So this is one of the positive differentiations between what Manhattan Street Fund is doing and what traditional venture funds do. Okay, deal flow. Manhattan Street Fund benefits from our team being plugged into the Reggae Plus space. And Manhattan Street Capital's deal flow is great, constantly being approached by companies at all times that we're qualifying and helping guide as to whether they should use Reggae Plus, and helping qualify them as to whether we think there are good deals where the investors will be celebrating that they got involved later on. So there's a lot of synergy there. But Manhattan Street Fund is not limited to Manhattan Street Capital companies. It'll make the best deals for itself based on its investors' interests. That's why, in part, we have the investment committee, which will judge all investments that the fund makes. I'll get into some other nifty things that we plan to use, but there's a huge conflict of interest here, obviously, right? It would be convenient for Manhattan Street Capital if every Reggae Plus we do that wants to raise money would get money from the Manhattan Street Fund. And it'll happen in some cases and not in others, because it can't be otherwise. But there's still an inherent conflict of interest, because I have feet in both camps. So be aware of that risk factor, which will be stated in all the relevant documents, because it has to be, obviously. The fund fees will be 2% annual management fee and 20% of profits. The structure is a limited partnership. There'll be lending protections, but we don't want to bankrupt companies because they owe us money. We want to get our money back. right? When lending money, we want to work with the companies. So we'll have innovative arrangements with them to to increase the likelihood of us getting our money back and reduce the damage to those companies. We don't want to bankrupt the company just to get paid. That'd be silly. We expect to build, up into the range of 20 deals and then more per year through Manhattan Street Fund. As a gauge, each deal will vary in size from a minimum probably of $200,000 up to $1 million or so. That'll vary with time. And the mix of lending and equity will vary deal by deal as well. Selling shareholder benefit, I mentioned. I'd like to get the Reg A Plus live and raising money in October. I'm not sure if that's doable, but it might be. We're moving forward on a number of fronts to get things done here. I'm going to talk about a couple of personality aspects, if you will, differentiators about Manhattan Street Fund beyond just people selecting deals and investing and lending. I intend, well, two things. One is Manhattan Street Fund is going to get a license from Manhattan Street Capital, because Manhattan Street Capital has some very sophisticated AI algorithms built into it. So we're going to license those algorithms from Manhattan Street Capital to give us a head start. And I intend, this is an intent, it's not going to happen front end loaded because it's going to take time. But it's my intention that we will build sophisticated AI machine learning software that will help more efficiently identify hot prospect companies and reduce the amount of manual pre-screening that needs to be done for Manhattan Street Capital and for Manhattan Street Fund, but primarily for the fund, because the mere fact that we're saying we're doing pre-Reg A deals invites the risk that we'll get companies that are very early stage, which can be great or not, right? So there's a lot of need for intelligent, friendly screening through that approach. It's also my intent that we will build community involvement in Manhattan Street Fund, initially through our investor members, so that we'll be really looking for you to bring us neat companies and opportunities, and where relevant, to help us vet them in some cases, where we don't have enough internal expertise to rapidly assess a company. We'll want that kind of involvement. And over time, we'll extend it beyond the investor community of the fund I intend that we'll extend it beyond the investor community of the fund, further afield, to get larger engagement over time. And again, there's a lot of nifty things that we can do there. I don't want to overpromise because it won't be there front end loaded. It'll be there later. But it's my intention to use technology to help us do a better and better job with Manhattan Street Fund. We should be doing that, right? I'm a technologist first and a financier, if you will, second. And I think there's an awful lot of upside in doing this properly over time. Community involvement and giving rewards to members, and giving rewards to members who aren't investors over time of a different nature will be part of that program when it comes together. Why invest in Manhattan Street Fund? Basically two reasons. One, because we're going to be doing neat things. There's some really neat companies coming to market with Reg A pluses. Sometimes will cause good things to happen that you will feel good about being a backer of, and also to make money. We have a very good prospect of making strong profits and being able to recycle capital on a rapid basis. That can make this a really attractive investment fund. Still got a lot. We've got everything to deliver. We haven't raised the money for it yet, right? There's a lot to do here, but over time, I think we can do a really, really good job with it, and it'll be a lot of fun. It's very strategic, the combination, the synergy between Manhattan Street Capital with our deal flow and our awareness and knowledge of the companies that we're already talking with the fund. So it's a beautiful synergy in that way. And there is a huge need for this. There is a huge need, and it turns out not to be that easy to structure a fund to do what we're doing. What we're doing from a regulatory standpoint is rather complex. We figured out how to do that properly. Good barrier to entry for us. Let's see, liquidity for investors. It's my intention that, this is assuming the Reg A Plus gets qualified with these clauses included, the SEC will say yes or no in their qualification process. It's my intention that we'll have monthly liquidity options for our investors on a limited basis. You know, there's never going to be a run on the bank because we won't allow it. But as long as the fund is not under threat as to the size of the total scope of the redemption requests, if somebody needs their money or some of their money back, we will make it as easy as we possibly can on a monthly basis, because why not? And again, these are Reg A Plus public shares or securities, which you'll be allowed to trade in secondary markets. I don't plan to list the company on a major exchange, but we may list on some of the fledgling, there's an emerging group of fledgling markets where you can trade Reg A Plus securities post-offering. And we may list on one of those or two of those. But direct liquidity, I think, is a significant advantage of what we're up to here. Okay, now moving on. What is Test the Waters? Test the Waters is an aspect of Reg A Plus which allows investors. I actually suggested this to the SEC in the summer of 2012 when they were looking for input as to what they should do with all this newfangled crowd investing online stuff. I didn't call it Test the Waters, they did, and I don't know for sure that they took my suggestion, but I literally suggested this, which is companies that haven't done it yet and haven't spent all the money getting ready should be able to test the involvement. They should be able to check and see how much interest there is in what they're doing online without having to go and get it all done first. Test the Waters is just that. In a Reg A Plus, you are allowed, a company is allowed to make an offering as a test to see how much investor interest there is. We have such. We have a Test the Waters for Reg A Plus, for our Reg A Plus, for the Manhattan Street Fund. And you guys can make reservations in that which are non-binding on you. They're binding on us, and to the extent that when we get, if and when we get qualified, then we are committing to you that you will get the initial offering price of the Reg A Plus. And immediately on qualification, actually not quite immediately, first thing we'll do immediately on qualification is convert the reservations of those reservation holders that want to into investment. So you'll get then an opportunity to convert your investment on those terms. And as soon as that's been largely, you know, the majority of folks have done that and only stragglers are left, then we will change the security price of the offering. Not allowed to pre-announce what the change will be, but we will change it, and you will you stand to benefit from that fact. So that's a reason, that's an advantage to making a reservation now. The amount of your reservation will be material. If you reserve $500, but you really wanted to put in 2K, the reservation will be for what it is. You should, you know, set the reservation amount to be what you want to convert. That's binding on us. It's not binding on you. So take a look at the Test the Waters page on the homepage of Manhattan Street Capital if you are interested in that. We are also raising money from accredited investors into a Reg D convertible note, which has, because it's more risky, it's earlier stage, it's $10,000 minimum per investor. The share price we intend, the price per unit or share that we intend to launch with for the Reg A Plus is $4. And the convertible note investors, the Reg D, will be, the first ones will be getting a $1.36 conversion price. So it's advantageous to act quickly if you are interested, because we'll be raising that price soon in the Reg D. The next price will be $1.38 instead of $1.36. we've set a 10 million max. We don't need anything like that much, but if we get a lot of enthusiasm for a lot of money coming in, then we'll take more money because we can do more good with that money. We'll see how it plays out. It's a convertible note that converts into a Reg A Plus, which is not a commonplace instrument, but it's a legitimate one. And if the Reg A Plus were to be never qualified, then the investments would convert into a Reg D investment at a pre-money valuation of $20 million into Manhattan Street Fund. Profit distribution, I mentioned cash returns on loans, cash returns on profitable transactions. There'll be times probably where we'll make stock distributions. Logistically, that can be onerous to the investor. So I'm going to try and avoid doing it that way, where you have to have a special broker-dealer account set up that we can move the securities into. But we'll see how it goes. If it turns out we have to do it that way, then we will. My preference is that we'll liquidate those securities at a good time and then distribute the profits to our investors. We'll do those distributions quarterly when they occur, or more frequently. If it turns out that we're getting too much appreciation in our equity instruments, we may need to make distributions more rapidly. So, then we'll do so. We won't be waiting around in that case. So now I'm going to switch over. How are we doing on time? I haven't even looked at my watch up until right now. So we're doing good. Good. I must be speaking like the FedEx man. So in a moment, I'm going to go on to describe the Manhattan Street Capital offerings that are current and interesting. And the point here is twofold. The first point, relevant to the Manhattan Street Fund, is that these are examples of the sort of company that we might fund in the future through Manhattan Street Fund. I'm not saying we would have, I'm not saying we will, I'm just saying these are examples for you to take a look at and get a sense of. So we've got a double benefit going here when I describe those companies. So now I'm going to just put my Manhattan Street Capital hat on and describe them briefly. And then we'll go into the Q&A session on the Manhattan Street Fund and on these companies. Okay, so as in the sequence of the agenda that we had distributed earlier, Caltier Realty is raising up to $50 million. They're doing commercial real estate, multifamily real estate, and commercial buildings and hotels. They happen to be based in San Diego, which is where my companies happen to be based, because that's where I live. And it's an interesting company. There's less risk in some respects. There are fewer multifamily Reg A plus real estate offerings. So that's an interesting company, and they're getting very cost-efficient traction in their marketing. So that bodes well for their Reg A plus to be successfully funded. And just so happens that one of the main partners there is English too. So I have and I am myself a limited partner in that fund. Next company I want to describe is ERC Home Builders, raising a Reg A plus with a maximum of 50 million. Been live since late December. And ERC Home Builders is focused on building communities of single-family homes aimed at millennials, because millennials need them. And these homes will actually be rented out to the millennials. They're not typically going to be buying them, because so many of the millennials have student loans that mean it's impossible for them to go buy a house. That's kind of a big dynamic out there. So they'll be renting them. And ERC Home Builders will be frequently selling these communities to private equity firms that are very hungry for them. There's a huge demand for such developments. They're starting in Florida. They recently announced their first land buy deal, which is in process now. They're in the process of getting it all checked out and balanced, and that they intend to I think, break ground or start on in September of this year. It's a great company, great people by my book, but I'm not allowed to recommend individual investments. I'm going to recommend all of them. That's to some reasonable extent, but buyer beware. Any investment activity has risks, so be careful with your money. Read the disclaimers, read the Reg A Plus offering circular, make sure you understand all the risk factors. Golf Suites completed their Reg A Plus in May, and the first Reg A Plus, and they are gearing up to do another Reg A Plus with a 50 million maximum. They are expanding the market for golf by building numerous, actually they're adding new features to their business plan as they go forward. They're going to be expanding into shopping centers where brick and mortar shops are moving out, leaving space, and the company is going to be moving in and doing some really neat things in the golf space with golf instruction and entertainment in smaller facilities, as well as the larger facilities that they're already doing. They have their first facility in Tulsa, Oklahoma, which they acquired the lease for in September last year and have been operating since. And they had to close it down during quarantine, but have reopened it recently, and they're getting good traction there too. So Golf Suites is expanding the market for golf to entertainment and training, education. It's got a very high-end focus for golf pros, as well as essentially meaning that golf nuts can go and bring their family and their business associates and have birthday parties and lunches and other gatherings, and do it in a place where they get to play golf, or rather use a driving range where they get to improve their golf, where they get the Golf Suites Academy, where they'll learn better skills with professional tuition as well. So it's a good mix, and it expands the golf market well. It competes with Top Golf, obviously, and that's a direct competition, but the market's huge, and Top Golf has only penetrated a small portion of it. Cloud Commerce is another company on our platform, live with their Reg A Plus. One of the things that makes them interesting is that they are conducting a secondary offering. Reg A Plus has been expanded to include secondary offerings for public companies. And they are offering a debt instrument in their case that pays 10%. I'll go back to the other two because I didn't talk about that. It offers a 10% dividend payable monthly in a non-convertible security. Golf Suites was selling shares of preferred stock that pay an 8% dividend payable monthly, and ERC Home Builders is selling equity ownership preferred shares that have an 8% dividend that is paid monthly, and they're, I think, 5 months in at this point. And so I expect that Golf Suites will make a similar offering in their next Reg A Plus. Another company which we hinted at that we still have to, we don't have this offering live. In approximately 2 weeks, we'll have another offering live on Manhattan Street Capital that is a Reg D. Many of you may be familiar with Beyond Meat. Beyond Meat has a market cap this morning of over $10.5 billion. They are obviously doing very well, and since their IPO, they've been very well appreciated, if you know what I mean. Their stock is appreciated, and they're getting very good traction. There's a company that is a direct competitor to them called Impossible Foods, and we expect to bring live in 2 weeks' time a Reg D offering with a minimum of $100,000 per investor to get into a private transaction into this company now, where they have good prospects of conducting an IPO, and they are a direct competitor to Beyond Meat. So the valuation might end up being very, very attractive for the IPO, and then post-IPO it might perform very well. So there's all the usual caveats and risk factors, but it's a short-term opportunity. When it goes live, there isn't much time to take that capacity for those of you who are interested. With 100K minimum, 99 investors maximum in that offering. Okay, so that concludes the presentation, or at least the parts that I remembered to cover, which is probably most of them. And now I'll go to the questions and answers, or at least the questions. I'll pull them up here, and bear with me, please, while I do that. Zoom group chat. Thank you. Make sure you look at the legal disclaimers, as long-winded as they are. We are in a regulated space. Oh my God, oh my God. So where's the chat, guys? Show me the chat. I'll go over here and see it. Chat. Show me the chats. Okay, good. Question is, I haven't heard from Carl. I haven't heard of the use of Reg A Plus to raise debt capital. Elaborate, please. Can it be term debt, bond, or can it be a convertible note? And the answer is yes. Any legitimate security can be offered via Reg A Plus. The only thing you can't do is provide optionality where, we'll distribute profits to you quarterly, but you don't have to, you can reinvest them. You can't do that easily. To do it is really difficult. You can, but most companies don't take that approach. So if there's, say, a 5-year term, then at 5 years, the liquidation takes place and distribution occurs. And that was hardwired in the beginning. If it's, long-term hold, then it's stated as that with liquidity provisions that are what they are. But convertible notes, yes. Bonds, yes. There was early in 2016, I think it was 2016, there was a very successful storage company that did a bond offering. And I was frankly surprised. I figured that wouldn't be so appealing, but it went very well. Yeah, so Akash provided a link to the Manhattan Street Fund Reg D offering page. Thank you, Akash. And to the Reg A Plus test of orders offering page. Thank you, Akash. And some comments here about companies and not a company investor. Thank you. Yeah, thanks for pointing that out. I was muted. Yeah, that's kind of funny. Okay, maybe now I'll find the other comments. Yeesh. No. So I'm not seeing more questions. More questions? I have other questions that we received earlier. I'll pull those up. I don't think there is a typical term length. This is a term length for debt instruments. I haven't seen a typical term length emerge yet. Another question. Are there successful examples of Reg A Plus companies that have used their funds to provide good returns to investors? Used their funds? Yes. Yes. So I would say, we've definitely been in a nice environment for real estate, haven't we? But Fundrise is a good example, I think. I mean, they've raised approximately $750 million via Reg A Plus offerings, 50 mil each. They've done multiple offerings in many cases, and they've done parallel offerings, obviously, to do that much money. And they have delivered quite decent returns to their investors. They are a E-REIT, they're a REIT structure doing real estate investing. Again, it's been a good environment, so I'm not saying that they could have returned that level, decent returns in a difficult environment, but they've been producing good returns. And, this is a company that's UK-based, that I'll remember the name in a moment. It's a fun character, Brewdog. Yeah, Brewdog. They did a Reg A Plus in around the 2017 timeframe. There were loads of inefficiencies. We weren't involved. I wish that we could have been. They raised some money. They didn't raise a lot of money, but they subsequently raised a chunk of money from a UK-based private equity firm. They are a UK-based company, although they have a US entity and presence, and they need to for their Reg A Plus. And there was a sizable step up in valuation because of that private equity firm investment. So, yes, significant upside there, although that's not the same as being completely liquid, but a significant promise there. And there have been a number of real estate deals that have raised lots of money. When you see a 50 mil raise in Reg A Plus, it's most often a real estate deal because they're the easiest to raise large sums for. And quite a few of them are paying decent returns. So that's a long-winded answer to your question. Okay, bear with me. Yeah, okay. Given current market conditions and companies moving to a work from home environment, do you believe Reg A Plus offerings will move from commercial real estate to residential? They already are. Most of them are residential real estate already. The commercial real estate is a smaller segment today. But of the 1 billion I mentioned in 2019 for Reg A Plus, about 65% was real estate transactions. You know, that's the single largest segment by far. One thing I want people to know, want you guys to know, is that, you know, we pay close attention, of course, to the cost of marketing for all of our offerings. And it went up by 25 to 30% in March of this year when the market crashed, right? When the market said, oh my God, this COVID virus thing is coming to America. So when that happened, it cost 25 to 30% more money to promote your Reg A Plus and raise money. Then it recovered fairly quickly when the market stopped falling, you know, free falling, as it were. And subsequently, in recent weeks, we've seen the marketing cost is lower than it was pre-COVID, lower than. And I actually expected that we would get better engagement during this quarantine period. It's when, you know, people got past fearing for their lives mostly. And I think that's what's happened, is that we've still got a somewhat captive audience around the country where people are working from home a lot more than they did, have more time on their hands, and online matters more. And what are we doing with Manhattan Street Capital? What are we doing? We are taking brick and mortar transaction stuff and moving it to the net, aren't we? That's what we do. So to have it get more efficient and have it increase its awareness only makes sense, and has happened in China when they've done quarantines in past years. So at the moment, marketing costs are better than usual. And I would say the other thing that's significant is we are getting a number of beautiful companies approaching us at the moment. In recent weeks, we've seen a significant increase in the quality and number of quality companies approaching us. So really good vibe at the moment, more than usual. I don't have a way of predicting, and I couldn't, if I did know, I can't predict where the next Gulf Suites facility will be built. And in a Reg A Plus context, it's dangerous to make predictions anyway. But I don't have a clue when it will be, where it will be. They have some really nifty things underway, but until they're announced, they're not announced, right? The best marketing strategies, the strategies haven't been changed that much. The only shift has been to emphasize alternative investment over regular investment. You know, because of the volatility we've had in the public markets, more people are looking for alternative investments at the moment, as one would expect. So that's something which I was recommending some time ago to our companies, and they've been using that. But it hasn't been a wholesale shift. You know, there's just an adjustment there. Okay, I'm going to pull up my emailed list of questions. And I may need to put on my glasses. Yes, I will. How are we doing on time? Doing well. Okay, wrong place in my email. Too many damn emails, amazing. Here we go. Okay, liquidity. Yeah, I think I've covered liquidity pretty well. We intend to be very generous with liquidity, as you've gathered, except, you know, we can't be damaging to the fund, right? As long as it's not harming the fund, liquidity will be generous, as long as the SEC allows us to do that. And that'll be clear when we get qualified, if and when we get qualified. Returns, how will your portion of the returns from the fund be calculated? Ooh, good question. So you are an owner in the company, you own shares in the company, and pro rata to the number of shares you own is how your payments will be calculated. That's it, in a nutshell. So whatever, if you pretend we had 100 shares in the company and you own one share, and we made $100,000 profit on a transaction, you would get $1,000 sent to you. Duration. How long should I expect before I start seeing returns? Great question. So we will do our best to make distributions early, but it's going to depend, right? So there are lots of, but I could be too bloody comprehensive. Pardon my language. I'll stop that. I have this tendency to be thorough and take ages to explain things. In essence, we'll be as generous as we can, as early as we can. We'll be earning interest on loans, but mostly that will be deferred interest, right? So a company raising money, if they're paying, say, 8% to us as a random number of interest, they don't want to pay cash interest right now because they don't have any money. That's the whole point. We may do deals that way, but more often, I think, we'll be deferring interest payments from them until they get liquid. That won't be forever, right? There'll be a limited window. But the liquidity inherent in Reg A+, where every offering is a public offering and we can be a selling shareholder, says that in successful transactions that we'll get rapid turnaround. And so that what does that say? That says to me 6 months after we've made our first deal, we could be making distributions to our investors. And when we make our first deal, we'll be mostly gated by when we have enough money in the bank, frankly, because we know where to put the money already. The question is having the money in the bank. Fair enough. I'm hearing ding-dongs over here. Same question. Yeah, if I invest in the fund, yeah, right, good. Size of fund, how much money is the fund planning to raise? $50 million. We don't need that. We don't desperately need that much, but that's a good amount of money to do what we want to do without being gated by it. And frankly, you know, we want to do a great job, which means it's going to take people. And if we only raise a tiny fund, then you can't afford to pay the people. Then you can't afford to hire the great people. And then you're stuck in a lose-lose situation. You know, 50 million is small by VC fund standards. A 2% management fee on a small fund is very low by traditional standards. But, you know, that's okay. What we're doing is good. And we can leverage resources from Manhattan Street Capital, which we're going to be doing. Yeah, okay, good. Elaborate on the method we'll use to select investment opportunities. So essentially, it comes down to, is this company going to succeed in their raise, which is something we do all the time at at Manhattan Street Capital anyway. And then do we believe that this company has a long-term success attached to itself, which is, again, what we already do at Manhattan Street Capital. And then how risky are they for us to lend them money? How likely is it that they'll have revenues from which to pay us a percentage of revenues if they can't pay us out of capital proceeds for some reason? Those sorts of things will be factors. How reliable are the team? You know, those qualitative factors come into play. And, you know, detailed metrics beyond that. Yeah, what experience makes the Manhattan Street Capital Fund staff and advisors qualified to make wise investment decisions? Well, I'll talk about a challenging question. Good question. Yeah, so the fact that we're constantly qualifying and understanding companies that approach us and dealing with their founders and their CEOs and CFOs and getting good exposure to them is a huge advantage from the Manhattan Street Fund, from the Manhattan Street Capital side. That's very advantageous. Obviously, we use those skills all the time, and we can apply those skills to the other companies that we look at that are outside of Manhattan Street Capital too. We have a good team of advisors, though. So take a look at them. Some of those guys are really smart. And well, actually, they're all really smart. Some of them are more on the selling marketing side. Some of them are more on the strategic evaluation side. So we have really good people as advisors to us. But the truth is, at the beginning here, we don't have any money in the bank, and we don't have a full-time team working on this company, right? I am the guy that's driving this. So you're making a bet on me. I have done a venture capital fund, Irvine Ventures, and I've raised money from some of the best blue chip VCs in Silicon Valley, for Symantec especially, and for others. I've raised money from Kleiner Perkins when they were a huge factor. They're still a big factor, but not the same that they used to be. From Mayfield Fund, from other leading VCs, as well as having been a VC, as well as having done many angel investments myself and mezzanine investments, and now 5 years of experience here at Manhattan Street Capital. So I have a wealth of relevant knowledge. I really do, in terms of, the reducing risks. But it's going to be a matter of me selecting great people to build out the team for Manhattan Street Fund as well, because it's not just going to be me and our advisors, right? And shared time with some of our Manhattan Street team members, which is what we are doing initially. That's a temporary thing. It's going to be down to me to bring in excellent people. I think I'm really good at that, but hey, I'm only human at the end of the day. Okay. Contrast this with investing in a traditional VC. Good question. So traditional VC fund, much longer payback horizons, because they're generally investing in very early stage companies with no hope of any liquid outcome for a long time. So in fact, usually it's 100% equity. They're not putting loans in. So we're doing lending. They're not doing lending, maybe temporary short-term lending, but really doesn't amount to much. A conventional VC fund will take a commitment from a very wealthy person, that they like, maybe $1 million minimum. So it's a little difficult to get into those puppies. You have to be accredited or a qualified investor, even more so, which is someone that has a net worth of $8 billion and some other $8 million and some other things. But they'll draw the capital down when they need it. They don't take it in as an investment up front, which we're doing. And they will deploy that capital as they see fit with a long payback horizon. So 6 years out is when you may start to see some exciting returns. 4 years out, if you're really lucky, in a traditional venture fund. However, they are investing at stupendously low valuations. And when they hit it big, they might get 100x return on their money, and then they lose money on a bunch of them because they were big risk investments and they fell apart on, 1/3 of them fall apart altogether, or maybe more. And maybe 1/3 of them do great, and 1/3 of them will be milquetoast medium performers that don't generate fantastic returns. So what we're doing differently is that lending is a big portion of the fund. That's very different. But the rapid liquidity that we can bring, because these are Reg A Plus public offerings. Every Reg A Plus is a public offering. So even when the fund is not getting to sell shares or securities in the offering as a selling shareholder, or bondholder, or whatever it is, those instruments are liquid as far as the SEC is concerned. Some of those companies are going to list on the NASDAQ, some of them are going to list on the OTC markets, some of them will list on secondary markets. And those that don't list, there's still ways to transact those securities after market in Reg A+, because these are public securities. So it's much more convoluted when they aren't listed anywhere, but the options exist and are good. Okay, so I think, how are we doing on time? I think we've covered enough ground here. Let me see. I've got more questions here from beforehand. Size of fund. Probably will, I said earlier how many company investments will likely make per year. Selection criteria. Yeah. Yeah, covered that. There is, if somebody said they wanted to invest $20 million, $5 million in the Reg A Plus fund, I would want to get to know them first because they become a major shareholder and I want to make sure I like them and trust them, right? So, I don't think it's terribly likely, but it is possible. So caveats there. Yes, you can invest. No leverage. Yes, you can invest IRA investments. There's a tiny hesitancy there in my mind because you aren't allowed to have leverage. We don't have leverage. We're not going to use leverage, so you're okay. IRA investments can be made. Payment methods in the Reg A Plus, in the Reg D, credit card, check, wire transfer, ACH, and in the Reg A Plus, debit card, credit card, ACH, check, wire transfer. And I don't think I forgot anything. Okay, so if there are no more questions, I'm going to wind up the webinar. And I would like to do a couple of things as I do that. We will produce, because we recorded this one, sometimes I've forgotten to record them. We will produce a indexed, clickable version of this webinar. So if you choose to, you can go back and you can share it with your friends and you can go back and check it out and look at the interesting bits again to verify stuff. So we'll put that and it'll be on a blog post on Manhattan Street Capital in 10 days or so, thereabouts. And you'll be notified. We'll send you an email about that. I would appreciate it if you would send me feedback via email about what you like and don't like and what you think we should change, if we should change anything about what we're doing. Really appreciate that feedback because this isn't just about raising money and communicating how great we are. It's about me learning so we can do a better job from the get-go or before the get-go as we move forward. Question here. What do you think the investor appeal will be to an IPO capital structure that will dilute investors based on achievement of performance measures? It's an interesting question. I've got to make sure I really understand what you're saying, Carl. That's a complicated question. It's not terribly relevant to what we're doing. I don't see anyone doing that in a Reg A Plus. So I'm not going to answer that one, Carl, because I'm not sure I really understand your question clearly or that it's relevant to this audience. So just to wrap up a couple of things, if you're an investor and you're not accredited, then if you like what you see in here, I encourage you to make a reservation. It's not binding on you in any way, shape, or form. And you can invest. We'll end up reducing the minimum to $400 because the unit price, share price is going to be $4 at launch. And I like that. I think 400 is a nice number. And if you are accredited and you would like to get questions answered on the convertible note from us, feel free to email or make a reservation right away because we aren't going to allow many people in at the current price. We'll be stepping it up fairly soon. And I want to say thank you to Matt Meblin and to Akosh. Biro is his last name. So interesting pronunciation. For your help, guys, in making this happen. Thank you all for participating. I hope this has been helpful and informative and a useful use of your time. And I look forward to hearing from you about how good this business is or isn't, what the criticisms are or aren't. And I look forward to engaging with you over time if you choose to participate. Thank you very much for making time in your day to be here and read the legal disclaimers. And thanks. Have a great day.